guys, welcome to my channel. My name is Caroline and I'm so glad you could join me today. We're going to talk again about debt, but this time we're going to tackle a really big number. And we're going to talk about how to get out of debt even with an enormous amount. We're going to talk about different things that you can do and get right into it. But please, if you can subscribe to my channel, I would really appreciate it. Give me a thumbs up. And any questions that you have, I would love to hear from you. So let's get right into it. Let's say you open your mail and you come up with a debt that is this number. $100,000. Let's say you have $100,000 in student loans. Some of you might even have more. But this is an enormous amount of debt, and it's a sad situation that you're in. But I'm here to tell you that this number can be disappeared. You can wipe this number out. And we're going to walk through a few scenarios on how you can do it. So let's say you graduated college and you have had the benefit of having a very good job. Let's just say you're in the fortunate situation where you're making a good income. And let's just say you have, you're at about $100,000. This is not realistic for everyone, but those of you that have the fortunate benefit of having a high income, and yes, you do have debt, you're going to have to deal with it, but you are in an advantage of having this high income. So let's say you have about $6,800 that you see every month as your net. Let's say you've added up all your bills and they come to about $2,800 a month. So that's a huge gap right there. And there are ways of getting this number down, but it's going to take a little bit of thought, and we're going to talk about those as well. So let's say you have $4,000 a month left over. If you're really careful with this number and you don't blow it, you're diligent. So you've got a $100,000 payment. And actually your monthly payment is $1,161 a month. That's going to be for about 10 years. So unfortunately, you're kind of stuck if you're only making the minimum payment. It's going to take you a good 10 years. Did you know that you're in interest, you're going to pay $40,000 in interest if you just make the minimum payment? So that's a $100,000 loan plus $40,000 of interest that you're paying. If you were to follow this, you can probably pay that loan off in 2 years and 3 months. That's approximate. There's a great website that I go to that I just plug in numbers. It gives me a kind of a sense of if I'm looking to pay something down. Dave Ramsey actually has a great mortgage calculator, but you can put in the interest rate. So in this situation, you could put in $100,000 and you could put whatever interest rate. I put in 7%, and the minimum payment was a little over $1,000 a month. So it'll work on a mortgage, it'll work on a student loan, whatever you want to do. But that's just what I use. And it's very helpful because you can plug in numbers and play with that and then kind of get a sense of where you'll be paying that debt off. But in this case, you'll be paying this debt off in 2 years and 3 months and save $40,000. Now, let's look at, before we even get into talking about a smaller budget, let's figure out maybe how we can get that smaller budget. So here are the big three: housing, transportation, and food. Those are the big three. So let's tackle each one. Housing. That's a big part of your budget every month. And if you could think to yourself, how could I possibly maybe bring that number down? One of the things you can maybe think about, and we're not talking about forever, we're talking about just a small sacrifice, especially if you have something that is like $100,000 or more that you owe, or something really big. You might even want to consider being a roommate, or if you have the ability or the credit or that kind of thing, maybe you can think about purchasing a duplex and renting that second the second part of that duplex out. So now you don't have a rental, or you don't have income. You have income coming in that covers your housing. So that eliminates a huge part of your debt. All right, how about the second one, transportation? And I've put up here reliable, cheap car. You will not find people who are financially independent and people that have managed their budgets well having car payments. I know that's a big topic, a big thing to tackle, but it can eat away at your budget, especially if you are trying your best to get out of debt. So think about what you're driving every day. I personally drive a 2010 Prius. I paid about $8,500 for that. I paid cash. My husband drives a 2004 Honda Civic Hybrid. I think we paid maybe $4,000 on it. And both of them are reliable cars. They get us from point A to point B. And we actually have, because they're older and just in general, we have talked about setting up an emergency fund, because emergencies do happen. You have your oil, your maintenance, that kind of thing that will come up on your car, and they won't be part of your monthly budget, but you will definitely have to set aside a little bit of extra. But if you keep your monthly budget low and your income a little bit, at least above that, you have a little bit of breathing room and you can tackle some of that. We'll talk a little bit more about that in a minute. Your next one is food. But going back to the transportation, if you are finding yourself in a very expensive vehicle, you might want to consider selling that vehicle, or at least trying to pay that off so that you've got that vehicle paid. And you can really tackle, say you have student loans on top of that. Once you got your lower, smaller debts out of the way, you can start tackling that big student loan or anything else you have. So let's talk about food. Food is your third largest category, and it's something that you have a choice in. You can choose to either eat out, or you can choose to buy groceries and make food at home. It does take a little time, but I promise you that if you start to eat more at home, take your lunches to work, don't spend a ton of money on your food. That's another way of cutting back a little bit on your budget. And the other key is, and I touched on this, is to have your emergency fund, which is a minimum $1,000. So your $1,000 emergency fund is key. We're going to go through another sample budget, and this one's a little bit smaller. And instead of $2,800 a month, we're going to look at this one. So let's say you've got roommates, or let's say your rent is about $500, and maybe you can get it lower if you end up having some roommates, or this is what we call house hacking, where maybe you can live on one side of a duplex and rent out the other, and you don't have a rent at all. Utility bills, let's say they're about $100. Food, you've come into about $300, and we're going to pay cash for that, because cash, when you hand over cash, you're actually going to end up spending less, because you're going to think about what you have in your wallet, and that cash transaction just kind of keeps you a little bit more cognizant of what you're spending. Transportation, so the only thing you should be spending on that is some gas. Now you will be putting aside a little bit of extra money a month to deal with maintenance and that kind of thing. Internet, let's say it's about $75. Your miscellaneous items, maybe it's about $200. And then I've got a category called sinking funds, and I've got $200 in that. Those are irregular funds or irregular bills that aren't every single month. They're like your taxes, maybe your taxes on your automobile, different kinds of things. Let's look at some of them that I have here. So life insurance, car expenses, vacation, house repairs, Christmas. That's it. So Christmas is another one, gifts, that kind of thing. So you're going to contribute maybe a couple of $100 a month to sinking funds, $50 to your emergency fund. Now you've already got your $1,000 emergency fund established. So with this budget, you're at $1,525 a month. So this is very realistic. And the only thing I didn't add in here, and I forgot to, was your cell phone. And maybe that's an extra $50. But I've got a buffer in here that has miscellaneous of $200. So, if you want to be even tighter on this, you can be tighter on this budget. But this gives you something to work with. And I think if you have your emergency fund in place and your sinking funds in place, which are your, not every month expenses, you're going to be able to live and breathe and be able to tackle any debt that you have. So let's say you had that high-paying job and you are in the fortunate position that you do have some extra income. So now with this other budget of $1,525 a month, with that same number, you now have $5,275 a month to pay off on your student loans or your debt. So instead of 2 years and 3 months, guess what? It's a little over a year and you have paid 1 year and 4 months. I did not calculate the interest saved, but that's huge. So over the 2 years, it was $40,000. Now, all of a sudden, you're down to 1 year. So those of you that are making really good money to household income, if you're really careful, you can tackle debt like this. And those of you that are not making a big income, let's say it's $30,000 or $40,000, you're still going to be able to pay that $100,000 off. It's just going to take you a little bit longer. And let's hope it does not take you 10 years. So what you'll need to do is maybe try to work on increasing your income, maybe doing some side hustles. Like I've talked before, Uber Eats, Lyft, Uber driver. Maybe you can do some lawn maintenance. Get your hands dirty and do some cleaning for people. Whatever it is that you think you can make a little extra money a month, just an extra $200, $300, $400 a month can make all the difference in your budget. And then double check all your bank statements, your credit cards, and see if there's anything that you can eliminate so that your outflow is at a minimum. And again, I'm going to say it again, that those vehicles that you're driving, do you need a Mercedes-Benz, a Lexus, or can you get by on something that's a little more reliable or a little bit more budget friendly? Let's just say that. A Toyota or a Honda, and they are very reliable cars, and you can pick them up for $5,000, $6,000, $7,000, and I bet you if you make those choices, you will be able to sleep better at night. I am going to actually show you today my goals, and we don't have debt other than really our mortgage, but we have a couple of rental properties, and we have kind of this enormous debt on our heads as well, but I'm going to show you what we're doing. One thing I like is a visual, and I'm going to show you this jar that I have made. It's It was filled with M&Ms at the top, and on the side you probably can't see it very well, but this is one of our rental properties that we are tackling, and it started out at $85,000, and it's going to eventually, all the M&Ms are going to be gone, and we're enjoying eating the M&Ms as we make the extra payments to our principal. So I'm going to show you the schedule that we have. But right now we owe about $16,531.85 as of 9/25 of this year, 2019. So every month we put in what we have paid down on this debt, and we just have this little bit left to go. So you could use something similar to this and just keep it on your counter. It's just a fun way of just keeping everybody engaged and knowing that this is our goal. And let me tell you, that will feel so good when it's paid off. So I have another sheet to show you. This is my husband and our debt payoff schedule. So we have a rental, number one, the one that we're working on right now, that's $85,000 that's what our mortgage originally was. And our goal is to pay rental number one, rental number two, which is another $85,000, and our primary mortgage, which is about $130,000 left on it. And we have looked at it. It looks like it's going to be a little bit over 3 years. March 2022 is our payoff date. That is a date we will probably reach very close to financial freedom. And it's, these are heavy, heavy debts. So we try to think of fun ways of keeping, just the payoff and the motivation going, because it does take a little while. And I find just having the M&M jar is a lot of fun. Every time I go to the bank and give a principal payment, we eat a few M&Ms and say we're a few M&Ms down on the payoff schedule. So December 2019 will be which actually is this December. We should have our first rental paid off. And then that means instead of, student loan debt, we actually have income coming in from that rental. And I figured this is about what we'll be making with our first rental after we have paid the property taxes and that kind of thing. And I'm going to talk to you a little bit more about how we buffer the issues with our, expenses on our rentals. So about $564, $63 should be coming in after that, and then we're going to roll that right into our second rental. So then the next rental will be even faster to pay down. We'll have about a year of paying down aggressively everything that we can bring in. The following year, our second rental will be paid off. And then guess what? $531 and some change will be the income that we make from that rental. And so then we'll throw this income and this income together at our primary mortgage. That'll be the last thing that we have. So we've decided, instead of purchasing another rental right away, we want to pay down our primary home. So it'll take us a couple of years probably of aggressive payments, because what we end up paying is our principal, and then any extra will be paid down on the principal. So we will have some interest, but within 3 years, all of this debt will be paid. And one thing that we do in order to buffer our rentals, and this is something, if you're thinking about purchasing rentals, this is once you are debt-free and you've got that, student loan debt, let's just say you're able to save $2,000 or $3,000 a month. You can either put a really good down payment on a rental, or you can just save it in a money market account, and then if you see a really good deal, you can pay cash for that property, and I bet you could get even better deal than, say, if you were to negotiate in terms of having a traditional mortgage, that kind of thing. So there are lots of possibilities, and there are lots of things you can do once you are debt free. So we are in the process of doing that, and we're actually looking to make more income because of that, and eventually not having to work so much. So one thing that I do, or what we do, is we have 3 to 6 months in an emergency account. And so 3 to 6 months is put into a simple money market account, nothing fancy. We also put about a year's worth of gross income from each property. That will cover any extra expenses that come up with the property, because inevitably something needs to be repaired. And so that kind of alleviates some of that. So that's, again, in a simple money market account. We, now that everything is pretty much done, we also continue to contribute and max out our Roth IRAs. This, helps to build financial wealth. Our health savings account, I can go into that at another time, but that's our choice for insurance, and so we max out $7,000 a year that we put into that every year, and that is our primary health insurance. And then the goal is, after all of these debts are paid, we're probably going to be starting to tuck away more money and purchase more rental properties. So, that's where you are, guys. If you can just really start to put everything together, you will start seeing a bigger picture, and you'll start to feel so much more freedom. Thank you so much for joining me today. We'll be going into other topics. I'd really love to go into tackling not only student loans, but how you can get through college without student loans. And I'll probably have my daughter on a video with us at some point, because we've managed to bankroll her way through college, and I'd really love to discuss that and how we've done that. Could be very helpful for you guys. So please give me a thumbs up if you like the video. Please subscribe to my channel, and I will be back with you on other topics. Have a great day.